Joining us now, Khulekani Dlamini from Afena Capital. Khulekani, always a pleasure. We're talking about the Afena Equity Fund this evening, launched in 2008, May 2008, currently with 238 million rand in funds under management. And perhaps we should just ask you for your elevator speech when it comes to the Afena Equity Fund, before we go any further with this discussion.
Absolutely. The purpose of this fund was predominantly to get our smaller institutional clients into, obviously, the house. And so, therefore, it's a pooled vehicle for our small institutional clients. And the idea, very simply, is it complies with our philosophy in terms of how we manage money in general, which is, we look for assets that are trading at below normalized operating activities, and we put them on normalized multiples, and if they show upside, we buy them. If they don't, we leave them alone. It's very simple.
I've got to take this opportunity to give David a hard time on MTN, because Louis Stassen is backing MTN. I see it's also one of your top plays going forward, and just to reiterate David's stance, he's been staying away from MTN, Vodacom, and again, can I state it again? So everyone knows, he thinks that this industry is ex-growth. Khulekani, can you try and convince David Shapiro that he should be buying into MTN?
Oh, absolutely. It's a simple story. So separate the business into three areas. Voice, which is by and large quite commoditized. Data, which is slightly new, and e-commerce. Now, voice for MTN specifically is such that, it has a bit of a tailwind, purely because penetration in the 21 geographies where MTN is quite low. Penetration is about 56% relative to a global average, which is about almost 80%, relative to a developing market average, which is closer to I think 65%. So it will always have that tailwind in terms of voice until, we get to a normalized level where, penetration is at a good level. Data, on the other hand, is nowhere. Now, that's where the next level of growth is going to come from. And you can see, yesterday I actually saw Vodacom, and Vodacom gave me a $100 smartphone. It works just like an iPhone. So what this means is people can now consume data off of really, really cheap access devices, cheap handsets, which means, by and large, the data services that we take for granted, Facebook, etc., are going to be available to the mass market. So I think for me that implies there's a bit of a fillip in terms of data growth.
Khulekani, I see a light going on where David is concerned right now. I think you're getting him on this story.
My only problem is that charges and revenues are going to come down, or certainly, and you have to rely on the lower revenue or the lower charges being offset by higher, more people using it, etc. And I can't see that happening. And taking from overseas, it's a great dividend payer, but I can never understand why there's this obsession with fund managers to have it as the top holding.
Let's move on. Khulekani,
part of it, Dave, is really about what size it is in the benchmark. It is a very large size in the benchmark. So if you want to take, a 2% active position, you may end up holding 12%, purely because it's 10% of the benchmark. Oh. So that's the other problem with it. You kind of get forced to have it as a top holding if you actually believe the story.
Khula, I'm cognizant of time, and there are a couple of other stocks that I need to talk about in about 3 minutes. So looking at Sun International, your major plays, MTN, Sasol, BHP, Old Mutual, and Anglo American. Sun International's gone backwards for you. Why are you betting on this one?
I mean, the idea here is this is a very fixed cost business that has seen very, very negative growth in the top line. And I mean, we all know why. It's a function of PCE. Now, we actually did an exercise where, you assess what level of revenue implies what level of earnings growth. 10% revenue growth in this business would imply a 70% growth in earnings or more. So that leverage, we are waiting for it to actually manifest. We think it is reasonably cheap, and at this point it actually has gone down, in our view, as far as it can go, and therefore we are quite keen to hold and wait for the catalyst, which is PCE growth, to actually come through.
The problem is, by the time you finally get the increase in revenue, the hotels are run down, the casinos are run down, and they've got to start putting more money into the capital expenditure. So, you know, that's my issue, is that it's going to take some time. We still have a lot of excess capacity in that area.
Well, look,
it's absolutely a risk.
the other thing that you both do agree on, and in fact every other fund manager in the country agrees on, is Sasol. Let's go back to the Sasol story and why you guys are all playing this one so hard.
Sasol is an easy one. It's oil times rand on a 10 PE. You can draw the chart going back in time. Whatever Sasol basically trades on, you know, it's 10 times multiply by whatever earnings you forecast. And we actually do forecast a reasonably robust number coming forward. And put it on a 10 times, for us, it implies that there is a reasonable amount of upside that sits in there. And obviously, it's also, you know, there are a very large number of resource stocks that we don't like, and therefore it also acts as an offset. So its position is slightly magnified in the portfolio because it is a proxy for the resource space. You know, so it's don't let the position deceive you too much. Yes, we like it, but it's that big purely because it serves as a good and comfortable proxy for us for the resource space.
Khulekani, my mate Wayne McCurry loves Liberty Holdings. You love Old Mutual.
Yeah.
What's the attraction with Assurance Company?
That particular one.
Well, you know, the industry. I mean, Wayne loves Liberty Holdings, you love Old Mutual.
And we've got to keep this to a soundbite because I've got the whole Hot Stocks team waiting to join us here in studio. They're jumping at the bit to get on this desk. So Khula, you've got literally a 30-second soundbite on this one.
On Liberty, it's a great dividend payer. So, you know, in a down market, it's one of the stocks that you'd want to have. On Old Mutual, you do have a few catalysts that are going to unlock value. You have already seen the US business getting dealt with, and we are hoping that we're going to see a few more. NetBank is somewhere in that particular area. So what we are saying is it's one of the stocks that we think trades at a discount to its EV, and it has catalysts that we can foresee occurring in the short term.